Hey, what's up everybody? Jason here, Money, Success, and Happiness channel. And today we're going to be talking about good old Walt Disney. Ticker symbol DIS. Currently trading at $114.50 a share. So, today we're going to be talking about, is Disney a buy right now? Disney a sell? Or is Disney a hold? So, we all know that the parks had to get shut down for the whole little epidemic we had. And that basically made the stock plummet pretty poorly during February through today. It's slowly been making a comeback with the parks still being shut down and their cruise line still being shut down. A lot of people have lost a lot of confidence in Walt Disney, in good old Mickey. So, what to do? Well, let's talk about a little bit about Disneyland. So, it's reopening soon, okay? That's why I'm making this video. The Shanghai Disney already opened in May, and the fans bought the tickets out, sold out immediately. They had to put, masks and the social distancing rules in place, so obviously there was a lot less people. But still, people wanted to go, no matter what. No matter what was going on, people still love Disneyland. Now, our Disneyland in California is going to be opening on July 17th. And then Walt Disney World is going to be opening in Florida on July 11th. Okay? So, they're going to have the social distancing rules and the masks and everything. Their CEO right now is Bob Chapek, and he's basically saying he'll keep the park open as long as he can make enough money for the overhead of the park. Additionally, on top of that, Disney has a lot of stuff going on for it. Not just the parks are reopening, but it also has Mulan is coming out on July 24th, followed by Marvel's Black Widow on November 6th. As Disney usually dominates the theater. And if you didn't know, Disney actually owns Marvel. It owns LucasArts, which is Star Wars, and it also owns ESPN, just to name some of the bigger ones. ESPN actually, the NBA actually also announced that they will be restarting the season on July 30th. So this is all good news for Disney, A lot of people, I think, focus on the parks, but Disney it's multifaceted. It has a lot of different parts to its business, okay? So still people are very uncertain, what to do because of the park situation. Disney Plus right now, that's their streaming service, has 54.5 million subscribers. And its plans are to open up its streaming service to parts of Asia, parts of Europe, parts of South America, because they're trying to tap into that market that Netflix has. Netflix in Latin America, it has 34 million paying members, so they're trying to tap into that. And also on top of that, Hamilton is going to be available soon on Disney Plus. They actually made a movie of the hit play Hamilton, and instead of theaters, it will actually be available on Disney Plus soon. So that way, it can drive customers from Netflix and other streaming services to Disney Plus, so they can watch Hamilton, which is really cool. I'm sure it's going to be really good. Everybody loves that play. They've been talking about it for a long time, and I wouldn't be surprised, if Disney Plus just takes off in the next year or two. And even if the parks are struggling a little bit, I think the Disney Plus section is going to be, plenty to actually keep them afloat and keep them profitable. I wouldn't be surprised if it hit 75 million subscribers, by the end of 2020 with everything going on. As of right now, Disney Plus has 33.5 million paying subscribers. We're paying an average price of $5.63. In contrast, Netflix has 182 million subscribers, paying on average $10.87. So you see Disney has a little catching up to do. One thing that would be kind of cool, I think, for the parks now is less visitors means shorter lines. So, you can probably get on rides within 15 minutes now instead of waiting 2 hours, 3 hours for a ride sometimes when it's at its peak, crowdedness. But I think that'd be kind of worth it alone. That's one silver lining in there. But the reduced capacity also is going to have some impacts on Disneyland, of course. So here's the thing: they can raise their prices and still make enough money with less customers. People pretty much will pay anything to get into Disneyland from all around the world. So what does this mean for investors? Okay, admittingly, there's still risk if the infections go up. Okay, it can halt the process. If cases continue to rise, Disney will have to shut down again, and that's what a lot of investors are worried about. What's on the horizon for Disney shares. So let's go over some of the pros to buy Disney stock. One of the significant pros is it's got very strong brand appeal. Okay, I think anybody in the world, you can show them a picture of Mickey Mouse and they're going to know who it is. People on the other side of the world will know who Mickey Mouse is. Okay, and that's not going to go away. In addition, they generate a lot of revenue from the box office, okay, such as, like I spoke about, Star Wars, Marvel. Those produce a lot of cash flow for Disney. Also, Disney's top-notch intellectual property holdings give it protection from competitors, which would have to spend a lot more time and money to rival the company's holdings. So, segments include Disney parks and resorts in the US, Europe, and Asia. Its top revenue producer, the quarter before the pandemic, brought in more than $7.2 billion in revenue. The company also had a strong balance sheet, including more than $14.3 billion in cash and equities. Now the cons in buying Disney. Disney earnings show that the park closure are a major threat to buying a Disney stock. That's what people are scared of. The company plans to reopen, but it'll be with limited visibility. In the most recent quarter, Disney parks experienced and product segments saw 58% decline in operating income compared to the same period last year. Some think that the return to normalcy will take a lot longer than most people think. Some of the leisure travelers will not be going out. And also, even the locals, a lot of people still don't feel really comfortable with going in large crowds yet. So what does this all come down to? So Disney shares are down right now, but they're headed in the right direction. Disney's streaming service is going strong, and the parks will reopen eventually, and numbers will slowly start to climb up. There's going to be a lot of weaknesses in earnings for a while, and probably for over the next 10 years, it's going to slowly recover. Disney stock right now should climb back to the $150 level eventually, and probably will head up to about $200, but that can take years. Okay, that's on the long-term horizon. So you can't really lose with Disney right now if you buy it, but just know that it's going to take a little bit of time to recover. I'm a fan. I hold Disney myself. I have a small position in Disney because I grew up with Disney, and I like how the company has many different areas in entertainment, and not just the parks alone, but it has all kinds of different, it's got its fingers in everything. So I think no matter what, it's gonna survive, and I really do think people will surprise you. A lot of people, especially that are from other countries, they've always wanted to come to Disneyland. So some people, yes, will stay away, but a lot of people, I don't think you can take that magic away that easily from people that they don't want to come travel to go to Disneyland. I mean, some people probably have thought about this for years. So, and now with the new social distancing rules, Like I said, you're going to get on rides a lot faster. And so I still think they're going to be at maximum capacity for how many people they can let in the park. And they can also raise the price if they want to. And then Disney Plus is going to continue to grow. And other operations will slowly, start speeding up. And LucasArts, Star Wars, and Marvel, and ESPN, those are definitely not going away. So I think in the long term, it's gonna be a stock that's gonna be worth a lot more money. So it's just up to you right now. Like, when do you want to take a position in it? When's a good entrance point? So you can wait and see if stocks go down a little bit. Like today, Disney's is down about 3%, so that'd probably be a good time. But you might lose a few bucks in the process of waiting for it to recover. But you're not going to lose anything. I mean, it might go down a little bit, but eventually it's going to start climbing again. So I'm down on it a little bit today, but it doesn't really bother me because I know in the long run I'm going to make some money on it, and I don't have a large position anyway. So that's my take on it, guys. I hope you got something out of it. To me, I think Disney is a buy. Just it's kind of up to you to pick the right opportunity. When you think if you think it's going to go lower, or you think this is a good opportunity, either way, I think in the long term you're going to win out. It's just going to be a little slow going. So, all right, guys, thanks. Hope you enjoyed it. Bye.